Good morning, Bitcoiners. Hello, and welcome back to another edition of your Bitcoin Economic Calendar, the news and analysis you need to start the week off right in Bitcoin. Today is Monday, May 24th, and happy long weekend to everyone in Canada. Last week we had a pretty volatile week in the markets, and today we're going to talk about how Ledn deals with volatile market conditions. We're also going to talk about the DeFi index, which was down 62% intra-week. And lastly, we're going to talk about the Fed, which is now hinting at a potential policy shift away from the easy money policy that it's had over the last few months. So lots to cover today. Grab your coffees. It's going to be a good one. Starting as we usually do with Bitcoin, we see that last week saw the second largest weekly drop in Bitcoin's history, down 25.27%. And that drop was just a few percentage points away from the March 12th weekly drop, which saw a 33% drop actually that week. There's been several headlines coming across on this topic. Namely, we see one here in the back from MarketWatch saying that Bitcoin prices tumble 50% from peak. And Mark Cuban's referring to this as the crypto crash, or as the crypto crash as the great unwind. It is correct to say that Bitcoin price has effectively halved from a high of about 65K to a low of about 29K during this move in the last 2 weeks, actually. Now, this move has also delivered a big changes to the Bitcoin market structure. So we see here the Bitcoin futures annualized rolling 3-month basis. So this is in a way the implied yield on these futures has come down from a peak of about 45% to now mid to low single digits, in the 0 to 5% range. Some of them, the high ones are in the, even the highest ones are at 8.9%, again, from peaks of around 50%. Now we see that these levels of the annualized rolling 3-month basis on the futures is actually now trading similar to where they were a year ago. So this is a healthy sign for market volatility. So if we go back to the daily charts, we see that this is a big move down on Wednesday. And this move coincided with the release of the Fed's meeting minutes, which also brought down equity markets as well. And we'll talk about that in the next section. But we see that on Thursday, we caught a breather. And on Friday, we got some news that essentially sent Bitcoin back to retest or try to retest some of these lows from Wednesday. And the news was none other than the Biden administration announcing that they are now starting to target crypto transfers for a tax crackdown plan. This is pretty relevant for the space because the tax effects, so as we mentioned in the previous issue, tax changes typically basically come into effect in the following year, not in the current year. So because so many crypto investors and Bitcoin investors have large built up profits in their positions midway through this year, they are incentivized essentially to rush to book these profits and do all the transactions that they would like to do before this new law takes effect next year. This may continue to be a headwind for asset prices in this sector in general. We're going to talk about how Ledn deals with volatile market conditions in our What's Ahead section later today. Moving over to the S&P 500, we see that last week the S&P 500 finished down 42 base points at 4,161 points. It was also a down week for the Dow Jones, down 51 base points, as well as, actually the NASDAQ had a positive week, up just 14 base points. Going back to the S&P 500, now, although we're starting to see some really positive price action out of the gate today, it is likely that we'll see some pressure or some red in the coming weeks. And that is because of how big the move last Wednesday was. And let's just take back to essentially take a look at the Wednesday move. So here we have the Wednesday move. And we see that the market was basically selling off for the first half of the week. And then it recovered. It basically tried to stage a recovery Thursday, Friday. And now it's off to the gates on Monday. Now, what happened on Wednesday? What happened on Wednesday was very, very meaningful because it was essentially the Federal Reserve signaled, as you can see from the headline here, that it is starting to consider an eventual shift away from the easy money pandemic policies. Now, let's talk about this for a second. On Wednesday, the meeting minutes of the last Federal Open Market Committee meeting were released. So what these meeting minutes said was that, and I quote, if the economy continues to make rapid progress towards the committee's goals, the Federal Reserve might consider a policy shift soon. Now, what this means practically is that the first step towards this process is to start tapering their treasury asset purchases. They do this because by buying less government bonds, they implicitly let the interest rates on the far-dated maturities start to go higher, and then they go into the overnight base rate. But we'll talk about that in a second. Now, why did the news from Wednesday have such a huge impact in the markets? Well, let's break it down and understand why. When the Fed references the committee's goals, it's talking about, or as it did in the meeting minutes, it refers to 2% annualized inflation. That is the target. The actual Federal Open Markets Committee meeting was held on April 27th and 28th, and the meeting minutes were released on May 19th. But there was a very important event that happened on May 13th, which is that the Consumer Price Index results for April were published, and they came in at 80 base points annualized. So that's almost 1% inflation annualized. Additionally, the inflation for all items month over month increased 4.2% for April, which is the largest increase since 2008. And this is something that we covered in our Bitcoin economic calendar like last week. Now, what the market is reacting to is the fact that the Fed is getting closer to its targets and that it'll start the process whereby it lets interest rates in the far-dated bond maturities rise. So as we were saying, it starts tapering off its purchases of that 10-year note and on that 30-year note, letting those rates starting to go higher. The next step would be to raise the target for the overnight interest rate, which is currently sitting at 0% in a range between 0% and 25 base points. Now, it would not be surprising to see all the selling pressure from Bitcoin and crypto bleed over into the capital markets this week, which in turn would continue to put downward pressure on crypto markets and asset prices in general. Now, on that note, we do have some Fed speakers this week. Actually today, Governor Lael Brainard is presenting at a consensus conference by CoinDesk at 9 a.m. On Tuesday at 10 a.m., Vice Chair Randall Quarles is presenting about supervision and regulation. Crypto may come up here again. And on Wednesday, Randall Quarles is also speaking about his economic outlook at 3 p.m. So lots of Fed action this week. Make sure to stay tuned. We'll stay in touch. We'll stay on top of any relevant information and share it right here or through our social media. Moving over to gold, we see from the chart that gold seems to be seems to be the only asset that is having its moment in the current environment, finishing up last week up 2.07% at $1,880 per ounce. So as we can see from the chart here, and this is something that we've been tracking for quite some time now, gold continues to show continuation from a technical level after breaking out from this long downtrend that it had from August 2020. Now, while the current monetary tightening backdrop is just as bad for gold as it is for Bitcoin, gold may benefit from a flight to safety tailwind if equity markets turn in earnest. Moving over to DeFi, checking out the FTX DeFi index, we see that it was a bloodbath last week for DeFi. The FTX index lost 67% of its value intra-week before settling the week to close down 50.35% for the weekly candle. The move essentially sent the DeFi index all the way to levels not seen since January earlier this year. So it wiped out essentially 6 months of progress. And we see that it has bounced back a little bit since, but we'll talk about potential long-term implications of this move. Looking at Ethereum, it also dropped 41.48% for the week. And furthermore, the often quoted total value locked metric in DeFi went down from $88 billion to $49 billion. So a drop of about 45% in 9 days. Now, going back to the chart here and the DeFi chart, just to talk about the dynamics for a second, these types of meltdown moves typically happen because of cascading liquidations. And this was somewhat to be expected in DeFi, as participants often place one asset as collateral to borrow another in a platform, and then they take that second asset into a third platform. They borrow a fourth asset and take it to a fourth platform, and they do this so on and so forth until they have essentially the same asset backing many, many loans across different platforms. Now, when that main asset drops in value, the main collateral drops in value and transactions get clogged, that creates a domino effect of liquidations across different venues, and that is exemplified by this DeFi liquidation article saying or mentioning intra-week that DeFi liquidations were up 14-fold in broad crypto sell-off. Now, while this is healthy because it essentially winds down a lot of leverage, well, when this happens, the market should catch an organic bid, and we should be able to rebuild from that base. Although we may be getting close here, seeing that there is some buying happening right now, that does not mean we are out of the woods just yet. More pain could be still to come, and the sector will also face the headwinds of the proposed U.S. tax law in the near future. There's the aspect of that transfers of large value transactions being recorded in tax, but then there's also the question of how will DeFi protocols be able to comply with this request. So again, a lot of shifting and potential market moving developments. So it's important to pay attention, and we'll keep you posted of any relevant information right here. Moving over to our Bitcoin mining difficulty commentary, we see that the mempool has once again ballooned and transaction costs have risen as a result of that. If we check out the next block confirmation, it's currently right now at 85 to 90 sats per VByte, which is still pretty high or much higher than last week, but well below the maxes of 250 sats per VByte that we were seeing last week. Or not last week, sorry, 3 or 4 weeks ago. Now, this is all good, and looking at the difficulty adjustment, the next difficulty adjustment is scheduled to come next Saturday, and it's currently projecting to drop mining difficulty by about 5%. And in today's What's Ahead for the Week section, we're going to talk about how Ledn deals with volatile markets. So when the price of Bitcoin decreases in US dollar terms, this affects our Bitcoin-backed loans. This past week, on Wednesday, May 19th, we experienced a significant decrease on the price of Bitcoin. Bitcoin traded from around $39,000 at 11 hours UTC to as low as $29,000 to around 13 hours UTC, and prices were very, very volatile during the decline, trading in gaps as wide as $1,000 to $1,500 across various exchanges. Now, consistency in Ledn's underwriting and risk management is even more important during price moves like this. When the loan to value or LTV of a loan drops, and this means, or what the LTV is the outstanding dollar amount divided by the market value, US dollar market value of the Bitcoin collateral. When that LTV reaches 70%, Ledn sends a reminder email for clients to add additional collateral. Another such email is sent when the LTV reaches 75%. If no action is taken, and if the loan reaches 80% LTV, Ledn sells the necessary Bitcoin that is required to repay the loan, and the remaining Bitcoin collateral is returned to the client's Bitcoin savings account. Staying consistent on this process is very important, both to provide certainty to each client that they know the thresholds and the limits of their loans, and second, to protect Ledn's capital and all of the clients who hold assets on our platform. It is this consistent underwriting that allows Ledn to attract capital to our business to provide these services. To date, Ledn has experienced no loan losses, and this is an important statistic that allows Ledn to continue to grow our product mix. Further to this point, if Ledn was to extend credit to specific clients by allowing collateral thresholds to lapse, Ledn would be putting pressure on our financials in the event that these loans were not repaid or recollateralized. For this reason, Ledn standardizes its thresholds to ensure both financial stability and that all clients are treated fairly and consistently. It is our commitment to our savings clients that we will continue to improve our risk systems to ensure that we maintain 0% loan losses. This ensures the longevity and robustness of our savings products. And our commitment to our loan clients is to continue working diligently to educate our clients about the risks and benefits of Bitcoin-backed loans, and to plan accordingly and how to plan accordingly so that they can be prepared when these types of price moves happen. And in the unfortunate event that these price moves do happen, we will ensure that all affected clients were treated fairly and consistently. So Big week today. If you have any questions or comments, I welcome you to drop them in the comment section. We'll look to answer your questions or incorporate any feedback into our upcoming videos. If you don't yet have a Ledn account, I welcome you to check out ledn.io and learn how you can start earning 6.1% on your Bitcoin and 12.5% on your USDC. Thank you, everybody. Have a wonderful week and see you next time.